Hey, folks. Welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Wednesday, June 23rd, 2010. Well, folks, the markets again initially started out on the flat line, ultimately getting pounded at the 10 a.m. Eastern time frame based on some really ugly housing news. Now, again, today is Fed Day, so we're waiting for the Federal Reserve to release their statement any second, and that should be out any second. But the market started out today flat ahead of that, and then all of a sudden what we got was some economic news here on new home sales. New home sales plunged 33% in May. Sales fell a seasonally adjusted rate of 300,000. This is the lowest rate of all time, folks, and that is a shock to this market. And we saw right here on the charts, look at this drop. This is a pretty powerful drop from basically a flat point on the day in the markets to all the way to the 108.50 level. Now, the 108.50 to 108.60 level was a master level that we talked about on the nightly videos. We talked about this, obviously, in months past, in weeks past, and in days past. But this was a key level, and again, it came right down there, hit that level, and got a nice bounce off. Now, since that point, the market's going into hibernation mode. And again, we're waiting on the Federal Reserve here. It could be out any second. It looks like it's out now, folks. We are seeing a little bit of a sell-off starting here on the Federal Reserve as we're getting some economic news from the Federal Reserve, the FOMC policy statement. Now, again, it looks to me like they're keeping rates the same. No change in the federal funds rate, 0 to 0.25% Fed funds target. Fed downgrades economic outlook, though. That's something a little on the bearish side. We're initially seeing a little bit of selling here, but now it's starting to inch up. Now, again, the key is going to be how the dollar reacts. Honestly, I couldn't care less what the Federal Reserve says here. It's not about what the Federal Reserve says. It's how the dollar reacts. If the dollar drops, this market goes up. If the dollar goes up, the market will drop. That's all it is, folks. And again, let's take a look at the UUP here, the dollar index, to get a good read on this. Sure enough, we're seeing a little bit of a bounce in the dollar. Notice the dollar getting a bounce here. See this long tail? The dollar was trading down here, and we're now seeing a little bit of a bounce, and that's telling me that, again, the spiders should be seeing a little bit of a sell. Yup, look at that sell. Look at that beautiful sell here. And again, all it is going the opposite way. I repeat, the opposite way of the markets here in relation to the dollar. Dollar goes one way, markets will go the opposite way. And I just showed you that we got that bounce on the dollar as the Federal Reserve just released their statement, again, downgrading the economic outlook. Fed Fund maintains the 0 to 0.25 Fed funds target. Oil extends losses now after the Fed. We're seeing a little bit more of a down move in oil, which makes sense. If the dollar's getting a bounce, generally oil will have to go down. Now, again, the markets are finding or trying to find a bounce. Volume has been dead across the portion of the day. Look at the markets right here on the volume side. Very, very dead. You're starting to see a good little uptick in volume right here as the FOMC policy statement was just released. But going back to earlier news, folks, that jobs, the home sales, the new home sales were just ugly for this market. The market tanked on it right down to the 108.50, bounced, and then you basically went into a holding pattern, which is a slight sideways to upside move on the markets into the Federal Reserve meeting and the announcement right here, and we just got that announcement. Now, what are we seeing here? Well, first of all, first minor support is being hit right here at the 20 moving average. That's exactly where this market came right back in to, and if that breaks, then you have a little pivot right here on an intraday basis that will be the next stop. That'll be the 108.75 to 108.80 level, and that'll be on watch as well. If you get through that, you're going to look at the lows of the day. The 108.50 level as being the next level that this market could take out or touch at least before a possible bounce. Markets are getting a little bit of a bounce here. It's not a drastic sell. That's telling me the dollar's really not rallying up that much. Might even be coming down a little bit. And sure enough, you can see the dollar has kind of paused up here. Yes, it has a tail. Yes, it got a bounce, but you're not seeing a dollar going like this yet. If the dollar goes like this, then we're going to go right back to the lows of the day. There's no doubt about it on the UUP or on the dollar index, and the markets obviously would follow suit all the way to the downside as the dollar popped. All right, let's go back to the spiders, touch on a couple other things. What's strong today? What's weak today? The strong stocks, let me touch base on these. ExxonMobil is one of the weak stocks. It is down 71 cents, 70 cents on the day. That is a nice fall on ExxonMobil. Chevron today also on the weak side, down $1.50, really hitting the lows of the day here. That should be watched very carefully as well. Again, getting to a level where I might be interested in picking up a little bit of a position. Now, the one stocks or the two stocks that are doing well today, Goldman Sachs. Now, it's not up tremendously, but considering the market is kind of on the weaker side here today, it is doing decently, up 32 cents, and JP Morgan is also doing pretty well. Now, I'm just noting here, folks, that we are getting a bounce in this market. The market is starting to bounce up. We'll see if the initial reaction was a false move, and now we can have the dollar actually start to come back in. If the dollar comes back in, this market will take off to the upside. JP Morgan, look at that. Got a little bit of a dump, but it's also bouncing up. Let's take a look at the dollar. Yep, look at this. Dollar starting to create that red candle again, and sure enough, that means the spiders should be bouncing up here a little bit, and look at the bounce. I mean, it's so predictable, folks. You can really dictate where this market goes day in, day out by just looking the opposite way of the UUP or the dollar, whichever one. You can follow the UUP because it's the dollar index, but the dollar itself is fine too. All right, so that's what we're seeing here, folks. Now, again, does that mean we're going to break up? If we break up, where are you going? You'll have a one-stop shop right here, the 109.50 level. If you get past 109.50, you're going to go to the 50 moving average. 50 moving average at 109.70 to 75. Those are your levels of resistance to the upside. That would basically take us back to the highs of the day if we got to that 50 moving average and a double top. Spiders are now starting to come in again. So the market, again, wishy-washy here, whipping back and forth, again, going the opposite way of the dollar. Let's take a look at the UUP again. And again, the UUP beginning to uptick just a little bit. Let's see if we get a little bit of a green candle forming up here as the markets, again, you're starting to see them downtick slightly. Therefore, the dollar should tell us that the dollar is upticking. All right, what else do we want to touch on? Obviously, I talked about the strong stocks today. Financials, if there's any strong stocks today, that would be them. Financials, again, up slightly. You do have a little bit of strength in a couple areas. Research in Motion's up about $1.35 today, which is a nice little move. Netflix, I'm noticing Netflix here up about $1.30 or so as well. But again, dollar now starting to downtick. This is good for the markets. Dollar downticks, and again, we're starting to see a little bit of a bounce starting. Look at the bounce coming in here. See it going up just as the dollar downticked? Look at that. It's an amazing thing, folks. It really is. Follow that dollar. And again, join the Research Center. We're putting out trade alerts as we speak. And again, hot charts and alerts, pro trader watch list. In the chat room, trade alerts always going out. You want to be privy to that stuff because, again, that's where you're going to make the money. We're going to make some money here in the afternoon session. We're going to make some money tomorrow, the rest of the week, and the rest of the month. It's there to be had. Let's do it. Take care, folks. Again, watch for this continued reaction on the FOMC policy statement. FOMC, the Federal Reserve, does not change interest rates but downgrades the economy slightly. Now, you might say, well, why isn't that causing the market to tank even more? Because essentially it's everyone knows it. The Federal Reserve is late to the party just like every other time. And essentially we all knew that home sales were bad today. We all knew that the economic news because of Europe and everything else has been horrible. So the fact that they're saying this, it's kind of like, okay. Now, again, what the key is turning your attention to the dollar. The dollar is what's going to tell you where it's going to go, and that's what you should be following. Take care, guys. Join the Research Center. Join the chat room. We will see you soon.